Hey taxpayers, let's talk taxes. I know, not the most exciting topic, but stick with me because some of the changes being discussed right now could save the government trillions, or they could put more money in your pocket. Either way, they're going to impact a lot of people. It's Tiffany Gonzalez, CPA here, CEO and founder of Accounting to Scale, and your tax expert. Some of these proposals might surprise you. Getting rid of tax breaks for electric cars, taxing employer-provided gyms. Yep, those are on the table. Let's break them down in plain English so you know what's really going on. First up is the repealing of the green energy tax credits. Right now, the government gives tax breaks for things like electric vehicles, solar panels, and other green energy investments. The idea is to encourage clean energy adoption. But critics say these credits mainly benefit the wealthy and big corporations, while costing taxpayers nearly $800 billion. If these tax breaks go away, buying an EV could get a lot more expensive. Homeowners looking to make energy efficient upgrades might pay more out of pocket. And overall, the push toward green energy could slow down. Will this happen? Maybe. Cutting them entirely is unlikely, but smaller rollbacks, that's definitely possible. Next is ending the Employee Retention Tax Credit, the ERC. This was originally created during COVID to help businesses keep employees on payroll. Makes sense, right? Well, now that the economy has recovered, some lawmakers say it's time to end it. On top of that, billions of dollars in fraudulent claims have been made under this program. If you're a business owner, this could mean losing a tax break that's helped with payroll costs. And for employees, fewer incentives for businesses to keep extra staff. This one does have bipartisan support, so chances are it is going away soon. What about the child tax credit? Right now, some families can claim the child tax credit without every child having a valid Social Security number. A new proposal would change that, requiring a Social Security number for every child claim. Supporters argue that this could reduce fraud and ensure that only the legal benefit taxpayers qualify. But for families who don't meet this requirement, this could mean losing out on thousands of dollars in tax credits. This one is controversial, but since a similar rule has passed before, there's a decent chance this could happen again. Something else on the table right now is taxing elite university endowments. Yes, universities get a tax break, a lot of them. Schools like Harvard and Stanford sit on massive investment funds, paying just 1.4% in taxes on the returns. The proposal raised that tax to 14%. The argument is that these institutions are hoarding billions instead of using the money to lower tuition or admit more students. If this passes, some schools might have to shift their financial strategies, maybe by offering fewer scholarships or possibly enrolling more students to offset the tax. Will it happen? Universities will definitely fight hard against it, but many people support the idea of taxing these wealthy institutions. So it really is a toss-up. Something else Congress is discussing is the SALT deduction debate. This is the state and local tax SALT deduction. It lets you write off up to $10,000 in state and local taxes from your federal bill. That cap is set to expire in 2025, and lawmakers are debating what to do next. Some proposals would eliminate the deduction entirely, which would save $1 trillion. Others suggest raising the cap, which could cost billions. The biggest impact is homeowners in high tax states like California and New York. They would take the hardest hit. Wealthier households would also see their federal tax bills go up. Will this change? Probably, but the final version is up for debate. Congress is also discussing eliminating the home mortgage interest deduction, and this one is huge. Right now, homeowners can deduct mortgage interest from their taxable income, making home ownership more affordable. The proposal? Get rid of it entirely. Save $1 trillion. Critics argue that this deduction mostly benefits higher income homeowners, while renters get nothing. But if this disappears, homeowners would pay more in taxes and home values could drop if the financial incentive to buy isn't there. Will this pass? Not likely. Homeownership is a major policy priority, and lawmakers know this would be a tough sell about. Taxing employer-provided gyms and transit benefits. If your job gives you free access to an on-site gym or helps you cover commuting costs, you don't currently pay taxes on those perks. But under this proposal, those benefits would become taxable income. Now, supporters say it's a tax loophole that mostly benefits white-collar workers. Opponents argue it would just lead companies to stop offering these benefits altogether. Will this happen? It's a relatively small change compared to everything else Congress is discussing, but employees and businesses will definitely push back. So here are my final thoughts. Some of the biggest tax reform ideas being debated right now, and some of these could save the government billions of dollars, and many of them could cost everyday workers even more. The real question is, which of these actually make sense, and which of these are a completely bad idea? Let me know what you think. Would you be okay paying more in taxes if it meant closing loopholes? Should homeowners be able to keep their mortgage deduction? What about taxing elite universities? I really want to hear your take. Let's talk about it in the comments below. Hit the like button and subscribe to our YouTube channel. Until the next video, your favorite CPA, Tiffany Gonzalez.